We've in fact got Mr. Sopti speaking at the press conference on those numbers. Let's listen in.
There were some of the NBFC's concerns which were addressed by providing credit enhancements, etc. So our general belief is that the cyclical elements of the slowdown will play out over the next couple of quarters, and some of the elements are also present in our book. For instance, we are seeing the auto slowdown for the sector as a whole, not for us. I'll talk about it separately. Hopefully that will play out by the end of quarter 4. As far as the results are concerned, the results are in your hand and they've been uploaded. I think we had a pretty strong quarter. The headline numbers speak for themselves. We have a good revenue growth of 32%, which has been supported by a interest income growth of 32% and a fee income growth of 31%. And even quarter on quarter, these vectors like net interest income grew 2% and fee income grew 4%. So pretty strong top line numbers to support the overall revenue growth. We also saw an improvement in our interest margins, which is a reflection of the way our book is constructed, which means that we have a large fixed rate book, and we've seen some sharp drops in the cost of deposits and therefore the cost of funding, and therefore there's been a margin expansion, and NIM for the quarter moved up from 4.05 to 4.10, and we see a beneficial trend going forward as well. So as far as the credit growth is concerned, credit growth for the quarter was 21% and deposit growth for the quarter was 23%. So I think this the second or third quarter consecutively that we are showing deposit growth faster or higher than credit growth. The quality of the book has remained stable, so we have credit cost of 18 basis points. Our actual profit for the quarter was as high as 1,667 crores compared to 1,432 crores last quarter. But we have chosen to strengthen the balance sheet by improving our provision coverage ratio, which, as you know, post the events of quarter 4 had fallen to 43%. We have raised the provision coverage ratio to now 50%. So there's a solid jump, and it's a big step forward towards moving to the PCR of 60%. As a consequence of that, we actually showed a net profit of 1,401 crores, which is of course a 52% growth over the same period, YoY growth over the same period last year. Our loan book quality, as I said, has remained stable. In fact, our net NPA has fallen from 1.23 to 1.12%. And of course, capital adequacy is the other one which stands out. If you include the half-year profit, which you normally do for computing capital adequacy, then our capital adequacy stands at a high of 515.77%, which means that our capital adequacy today is slightly higher than it was 4 years ago when we last raised capital, which I think is a reflection in the way we manage our capital. So a good ratio in terms of capital adequacy. Other than that, I think the client base now touches 23 million, and during the quarter we added 2 million customers, which is also includes the client base of Bharat Financial Inclusion, to whom we are all giving, to all of whom we are giving a savings bank account or a recurring deposit account as well. So about 2.2 million accounts have been opened for the customer base of Bharat Finance, which is 8 million customers during this up to this quarter end. So interest margin I've already spoken about. We have gone up to 4.10 as against a 4.05 over the last.
That stable net interest income, that's NII stable, NPAs are stable. 1274 for IndusInd Bank. Markets are wary about their exposure to India Bulls and some other group entities.